During this demonstration, we will give an overview of FinMind products and how they will enable you to perform financial risk assessment and take informed decisions. Our flagship product and key offering is the Automated Credit Insights Report, which provides an automated, insightful, and analytical credit report in a concise manner. It enables early identification of a potential credit risk event, simplifies financial analysis, and serves as an important tool for effective credit risk management and sound decision-making. To begin with, FinMind's Automated Credit Insight Report provides an overall automated credit rating on the top right-hand side, which is broadly based on 3 parameters: revenue and profitability, cash flows and liquidity, and capitalization and debt coverage. FinMind's rating scale and definition is provided in page 4 of the report, which is a 20-point rating scale starting from AAA-FM, signifying highest credit quality, to D-FM, signifying extremely speculative default risk. The first section of the report on page 1 covers a brief profile on the company, such as when it was founded and where it is headquartered, what are its business activities, its key brands, its major business and geographic segment with percentage of revenue, who are the main shareholders of the company. The second section of the report talks about revenue and profitability of the company and also assigns an auto-generated rating to this section. This section refers to the company's revenue growth over the last 5 years, its EBITDA margin and its net income margin. This section also provides qualitative comments on the company's return on capital employed by dissecting ROCE through DuPont analysis to assess the impact of operating profitability and capital employed turnover ratio on companies' ROCE. Notably, companies' return on capital employed is compared to its estimated weighted average cost of debt and the 5-year government bond yield of its country to assess its adequacy. The analysis of ROCE is not only of the latest financial year, but also includes the last 5 years. The third section talks about cash flows and liquidity of the company, explaining the rationale for the auto-generated rating for this section. This section talks about cash conversion ratio, which indicates the efficiency of companies' working capital management. Of note, this section explains companies' cash flows and liquidity profile with qualitative analytical comments. The fourth segment talks about capitalization and debt coverage, explaining the rationale for the auto-generated rating for this section. For debt coverage, net debt to EBITDA and net debt to CFO is analyzed, and for capital structure, debt to equity and debt to total liabilities is taken into consideration. It is important to note the adjustment and methodology used for total debt and equity on page 4 for calculating these ratios. Finally, the last section of the first page covers some of the important accounting quality and forensic checks flagged by our model. Furthermore, this power-packed one-pager of automated insights saves you considerable time by providing summarized key financial indicators with 1-year forecast, trend of past and forecasted automated ratings, intuitive exhibits and charts depicting the company's financial characteristics, as aforementioned. In page 2 and 3, you can refer to the detailed financials such as income statement, balance sheet, cash flow statement, key ratios, and other information. You may also refer to page 4 for the glossary and notes, which will be useful in understanding the ratios, terms, and adjustment used in the analysis of the Automated Credit Insights Report. This Automated Credit Insights Report is also available in presentation format, an effective way to present the company's complex financial performance and credit quality in a simplified, insightful, and visually effective manner. podcast format, as storytelling through an audio file, which will save time by listening to credit insights on a company if you're traveling, in the gym, in fact, anywhere and everywhere. One last thing. FinMind also provides financial forecasts for 3 years based on FinMind's AI model assumptions, with an option for the user to change assumptions. ACI Financial Projections provides projected change in credit risk as well as shadow rating, and indicates an early signal for a potential credit weakening or strengthening in the coming years. It can perform predictive credit quality and credit rating analysis under stress case assumptions. We hope you liked the demonstration. Thank you for watching, and we look forward to your order through our website, finmind.in.